AI algorithms are only as good as the data you feed them. So we know that AI is taking over because that's all we read about in the news. And we know that AI needs lots of big data, so an obvious pick and shovel play would be to invest in data centers. Now, the last time we took a look at AI data centers, we learned that the ETFs out there, two of them with rather low assets under management, they don't provide suitable exposure. And the reason for that can be found in the underlying indices. So here's an example. One of those ETFs tracks the Selective Data Center REITs and Digital Infrastructure Index. And look at what this does. It simply uses an algo to go find keywords and count up how many times they're mentioned in the company filings. So algos that do this aren't very good. So a recent example would be the Tempest AI S1 that we did a video on. They mentioned AI 228 times, so I suppose they would be high ranked. So this is rather rudimentary. It's easily gamed. And the other index tried to use traditional industry classifications like GICS. Those don't work very well here because AI is not an industry. ARC pointed to that recently, how the traditional classification of information technology is becoming less and less meaningful. Now, when it comes to investing in data centers, we're looking for a hand-picked list of companies to invest in that provide exposure to the growth of AI data centers. Now, you need to be careful there. A recent piece on Broadcom demonstrates the importance of pure play exposure. You can't just start calling things you're doing AI and then not have the corresponding growth. So we look for leaders within any niche. We don't like laggard stories. And one problem that we're facing is that AI hype is creating a lot of noise and lofty valuations. We'll give you at least one example of that today. Now, the firm that we're going to turn to for more information about AI data centers is Spear, and they offer a disruptive technology ETF that tracks a number of themes that you can see here. They cover about 100 companies across these themes. Their ETF has a lot fewer than that. They talk about extreme levels of due diligence, customer visits, visiting facilities, due diligence on financials and such, which is great. So they can uncover some of the crappy SPACs that have debuted. They say probably the largest opportunity is enterprise digitization. That's a pretty broad definition, but I suppose that's when everything becomes a digital twin. They talk about space exploration having a lot of opportunity, but they don't see companies today that are really proven. And the same holds true for their photonics and additive manufacturing niche there. An unlikely pairing. They talk about how within that niche, 3DP is, of course, the largest use case. They weren't overly clear on the photonics component, but they're looking for more established companies than what's available today. We've found the same thing, that the promise of a 3D printer on every corner didn't pan out, and neither did the distributed manufacturing thesis. Now, of course, people ask, what's the difference between Spear versus ARC? This came up in a podcast with the founder, Ivana Delevska, and she talked about their idea generation process. So they select a few focus areas every year. They deep dive and select 1 to 3 ideas. Their research process is bottoms up. Risk management, they don't reduce risk, but they manage the risk. That's great to see. And they try to minimize large downside moves. Well, they probably pay attention to the size of companies. In our piece here, Kathy Wood's Microcaps, we pointed to ARC choosing to dabble in a space that doesn't compensate you for the risk that you're taking. So the approach Spear uses is to examine value chains. They say we're all about valuation, so you wouldn't expect them to be chasing popular names. When it comes to investing in AI, they say there's 3 areas to look at: investing in the hardware behind AI. Of course, that's what we're talking about today. The next leg would be cloud infrastructure providers and cybersecurity. So not an obvious way to get exposure to AI, but I think a classic example here would be signatures. If you can recall having to update your signatures for your antivirus software, that's because back then you needed those in a centralized location. Those signatures were determined. Now AI just determines them on the fly at the edge. An interesting comment made by Spear. They say AI winners today are likely to get beaten up. This contrasts with McKinsey's thoughts on how AI OGs are really going to be the biggest beneficiaries of LLMs. So That remains to be seen. Here's the report we're going to look at today, AI Data Center Value Chain by Spear. And this diagram shows a whole lot of names that we want to try to vet. We'll start with this diagram that looks at the size of the market so we can try to bring that, refine that a bit. So processors or AI chips are 61% of this $650 billion total addressable market. Networking in second place at 15%. So 3/4 of the opportunity lies in two areas. But we might ask, are there any blue ocean opportunities here in the smaller areas? And one might be what they call high bandwidth memory. There's a lot of buzz around this lately, and this diagram from AMD explains that it's a new type of memory chip with low power consumption. We like that. And ultra wide communication lanes. So this is something that AI servers will benefit from. Spear, based on the research, sees the market growing from $3 billion to $30 billion, and that's evident in the investments being made by companies to assume the leadership. So back in, at least as of 2022, a company called SK Hynix led the HBM market with 50% market share. Next up was Samsung at 40%, Micron at 10%. This came up in our last AI data center presentation. So Samsung plans to more than double their HBM capacity this year, that would have been in 2023, from 2022, to lift its HBM output to the industry's largest. This was taken from an article by the Korea Economic Daily. Now, when you look at SK Hynix, their investor presentation says everything they produce is AI memory, and that becomes rather problematic because if everything is AI memory, then nothing is AI memory. So this chart here breaks down where their revenues are coming from by application. You see DRAM and NAND. And I think this points to certain challenges that await retail investors who look to dabble on issues on foreign exchanges. So we need a pure play segment to track, and we were trying to find that for Micron. Here you can see their compute and networking segment is what we had honed in on, but the problem arises when you look at the chart at the top there that shows their quarterly revenues. I think that's explained by a single headline. Micron's revenues plunge 40% amid weak economy and China sanctions. Execs banking on Gen AI boost. Of course they are. And when you look at year-on-year change and quarter-on-quarter change, that's rather misleading, that growth there, because they're simply recovering from some real lows there. So it's a case of the contributions made by this high bandwidth memory for Micron being able to track those. Now, so far, we've just talked about one component on what Spear refers to as inside the rack. So you can see there we've circled the three names, Micron, SK Hynix, and Samsung. Now we want to look at all the other names represented here inside the rack. So the first thing we'd propose to do is remove the hyperscalers. At Microsoft, they do a whole lot of stuff. If you were going to invest in Microsoft, it would probably be on the benefits they expect to receive from OpenAI across all those varied and well-diversified brands that they have. When it comes to Amazon, their cloud computing efforts are generating most of the profits. That's the cash cow that's funding their domestic expansion in e-commerce and international expansion, which is a different ballgame. Then you have Google. They're largely a play on advertising and cloud computing. I think large companies building their own chips is really another category. And it makes you wonder why Synopsys isn't represented. So Synopsys believes everything moves to custom for large firms, and they'll benefit from that. So will Cadence. We've looked at both those firms. When it comes to Samsung, they're a conglomerate, so there's not much pure play exposure happening there. Intel and AMD, these are laggards for AI chips, and you see a lot of people arguing that AMD is going to start seeing some benefits. The chart on the right here shows that AMD is going to start realizing higher growth than NVIDIA, and it would be next year. We invest in leaders, and we've been invested in NVIDIA before they even had around $40 billion market cap is when we first saw a skate to where the puck will be opportunity with data center. It doesn't always work out that way. Teradyne would be an example of industrial robotics where they tried to delve into that area and didn't make much progress. So we find NVIDIA and ARM to be both compelling. We've covered NVIDIA extensively. You can search our website for the various pieces on that. ARM is quite compelling and expensive. We only wish that NVIDIA would have been able to acquire them, and then we wouldn't have to worry about trying to get some exposure to ARM's remarkable business model. Now, that pretty much sums up chips. So let's talk about networking. So this diagram by Spear shows NVIDIA there in the center in their InfiniBand product. So they say it's the incumbent high-speed, low-latency connectivity standard. NVIDIA, if you recall, acquired Mellanox, and that certainly boosted their offerings in this space. And you can see on Ethernet there on the left, you have some other names, Cisco, NVIDIA, of course, Broadcom, and Marvell. They say here an interesting fact that LLM servers drive 10 to 100 times higher data bandwidth compared to traditional servers. And this slide has a very interesting factoid. It says NVIDIA's highly popular InfiniBand grew 5 times just in third quarter 2023. So who knows where it is today? We don't know how to find this metric. They apparently have dug that up and say that networking for NVIDIA today is a $13 billion run rate business, and it has the potential in 3 years to hit $100 billion. Well, that certainly alleviates some of our concerns as we've been looking across NVIDIA's other segments to see where future growth can come from, aside from just their data center segment. Interesting factoid here. Microsoft Azure uses over 29,000 miles of InfiniBand cabling, enough to circle the globe. So what's left inside the rack when we look at the remaining names here? Well, everything there in yellow, the 4 names you see in yellow, Broadcom, Taiwan Semiconductor, Supermicro, and Micron, we've covered those before. You can search, I believe there's videos on 3 of those in Micron we touched on our last AI data center piece. Marvell and Arista. So Marvell scratches 2 itches here on chip design and IP and networking, and Arista is generating a lot of attention. So we have follow-up pieces coming on both of those. But what about Amkor and ASE? So those are the other 2 names. Well, we'll introduce you to a new term here. An acronym OSAT stands for Outsourced Semiconductor Assembly and Test Services. So this is the industry term for third-party providers that offer specialized manufacturing and testing services to semiconductor companies. You can see there where they're located in the semiconductor supply chain here. And they serve lots of different end markets. This is from Amkor's investor deck. It shows for data center there, that's found in the computing segment, which represents 16% of revenue. So Amkor is one of the world's largest providers of OSAT. They're number 1 in automotive. They have an $8 billion market cap, so they're not that large. But when you look at their 2023 results, it's rather interesting. Overall revenues were down. But they go into talking about each segment and look at the computing segment. So they had full year revenue down 11%, but robust demand for 2.5D supporting AI and HPC solutions. So that's great that you saw high demand because of AI, but if it doesn't translate into strong segment growth, what does that really mean? So it comes down to this question here. Will the contributions of data center be diluted and muted for companies like Amkor? With ASE, they pose a similar conundrum, and they have far more opaque revenue segmentation. So let's jump to outside the rack real quick. And if we look at the various themes here, power management and thermal management represent some of the strongest growth. In particular, thermal management, Spear honed in on a number of players dominating the market. So you have Vertiv at the top, then Eaton, Schneider, and nVent. So our approach would always be to invest in leaders, but there's some concerns around Vertiv's valuation jump. So the efficient market hypothesis tells us that value, 500% worth of value, just isn't created out of thin air. There's probably some hype going on here, and we've calculated a simple valuation ratio over time. You can see there on the right, that's a price to sales, more or less. And this is certainly overvalued, and it's a SPAC. That means before we even consider touching it, we need to vet the hell out of it. So that was certainly something we'll look at in the future. So you may be wondering, what companies did Spear actually invest in? So they presented all these names. What can be found in the Spear ETF? Well, 5 names. You see them on the right here. So NVIDIA and AMD are their 2 largest positions. That's rather interesting. They've invested in both of those companies. Then you have Marvell and Arista, so two names we haven't covered but do plan to cover. And Invent there. I don't know anything about that company. It's certainly something that we'll want to take a look at. And additionally, we may take a more holistic look at Spears ETF and other themes in the future. So just to conclude, there are many ways to play the growth of data centers. Many companies involved, though, are not pure play. And this whole idea of skating to where the puck will be, as we did with NVIDIA, that's not always going to work. So more research is needed on certain names raised today. Make sure you subscribe because we're going to be putting out pieces on some interesting companies. So future deep dives coming on Vertiv, Arista, Marvell, and Invent. These may be videos or articles. You can also sign up to our newsletter. There's a link in the comment section. More pieces are coming on AI investing through our article channel and YouTube videos. I'm going to go ahead and leave you with this piece here. Is Broadcom the other NVIDIA? And it examines how a company classifies AI revenues and doesn't necessarily show them at a segment level, show the growth they're expecting. So please make sure to subscribe to our channel. Thanks so much for taking the time to watch this today.